Yeah, hello guys, it's GSM of X John again. Nafurahi pia kwa kuwa na nyinyi tena kwa mara nyingine. And for today, uh I won't speak Kiswahili because of the comments of other people. They say like they love English. So I know English is a universal language, so everyone can easily understand it and all those stuff. So I will try on my level best to speak English, and maybe in future I will try to create two videos. Okay, the one video I'll be speaking Swahili, the another video I will be speaking English. But for the sake of today, I'll be speaking in English. That's the okay. So according to other people comments, because I always read the comments and I always love my audiences to get something they want, to get something they like. So today I'll be focusing a lot on maybe removing the confusion in storyline. You know, a lot of people, they say that they don't even understand storyline sometime because, for example, let's move into this. Before going on, don't forget to like, share, and comment, please. I think I will send another video when the subscribers will reach at 500. Okay, so make sure you share the best way you can. Okay, so then the subscribers will reach 500. When the subscribers will reach at 500, then I will continue with other videos, you know, into the entry video, I think. So I will try to remove all the confusions in other videos. So try on your level best to make sure like I'm reaching 500 subscribers plus. That would be good for me. Like you will seduct me or you will seduce me to give you more videos. Okay, so some people, they say like sometime they may have this storyline and then fail. For example, in here, let's say this happen most of the time when you have daily to daily storyline. For example, you have this daily resistance in here. Okay, you have daily resistance in here, and then you have seen the rejection from the daily resistance. That's okay, because the first rule we have to see the what? We have to see the rejection, because let me write the rules for you here. Yes, the rules for you here. First thing we have to see, that's the rules. First thing we have to see. We have to sorry. We have to see the rejection on the level. Okay, that's number one. Number two, we have to get the breakout in one time frame law. That's the number two rule. And number three rule, which I will add today, you have to identify trading range in another lower time frame. So today I want to be focusing in this rule number three, because that's all about adding smart money into the equation. Okay, so then now you have to have rule number one and rule number two. Okay, rule number one and rule number two. But today, what we add something into rule number two. Okay, after getting the breakout in one time frame law, then I will add something here that will help you to really understand how the market is going. And then something that you need to put into your mind is that always the higher time frame is the time frame that is being respected. So you have to be aware of the higher time frame thing. And the higher time frame for us is the monthly time frame. Okay, it's the monthly time frame that will be the most higher time frame. We won't go higher than that. Okay, and the lower time frame, in when we add smart money into it, we can even go into the 5 minute time frame. That will be the most lowest time frame. Even though in Malaysian thing the lowest time frame is 1 hour, but when you add smart money into the equation, then we will go even more deeper. Okay, so for today, let's have these three rules. But today, and mainly I'll be focusing this rule number one and rule number two. Rule number three will be in the next video. Okay, so rule number one, let's say you have daily rejected daily in here. Let's say this is daily rejected daily. This is daily zone. You have daily rejected area, and one time frame lower, which is 4 hour, has to give you the break like this. You have to get the break. And I repeat again, okay? I repeat again, always remember the breakout should be seen on the line chart, okay? Seen on the line chart. That's why I don't draw the candles here. I only draw the line, okay? Because the line chart break is more significant than the candlestick break, But what you really need to consider, even though the swing point will be much more important when we add smart money into the equation. So after getting this breakout, now we know, yes, now the storyline has begun from daily resistance to daily support, okay? That's where the storyline will begin. So then what comes in is what? Sometime you may get the actual rejection and we get the 4 hour breakout, because the one time from lower breakout from the daily is 4 hour. After getting the 4 hour breakout, then the market will do this. You won't even get the entry because we expect the market to be bullish, but you will be stopped out. So why do you get stopped out? Now, I want to teach you this, why this sometimes happen. Because a lot of guys, they were asking me, sometimes they get stopped out and then the storyline was already confirmed. That's why I told you have to add some smart money concept into the equation. Okay, and now what I want to tell you is that the level that we'll hold will have the strong low, okay? The level that we hold will have the strong low. That will be the level that we hold. A strong low is the low that took out liquidity in here and then it block structure like this. This will be the strong low. And the level that will hold the price when the market is bearish will be the strong high. Will be the strong high, a high that took out liquidity and then it blocked to the downside. This, okay, this will be the zones that will tend to hold the price. This will be the zones that will be tending to hold the price. And what you really need to understand is this. Even ICT is the support and resistance trader, but he has named the whole stuffs. Okay, we have a lot of names and all those stuff. That's why don't be confused by the names. Okay, even ICT is the support and resistance trader. And he says always, when the market is bullish, expect the support to hold and resistance to be broken. When the market is bearish, expect resistance to hold and resistance and support to be broken. So what you really need to pay attention is when we are bearish, we know that the strong highs will hold the price. So when we are bearish, always focus on strong highs. When we are bullish, always focus with the strong lows, because those are the ones who will hold the price. Remember, every support will hold the price when we are bullish, but when we are bearish, every resistance it will hold the price. Okay, that's why I told you have to really focus on this, because strong lows and strong highs will bring much more clarity when you learn about storyline thing, because that should be added into your equation. So then let's jump in, and then I will go with these rules later. So let's jump in. First of all, what you need to see is you have to go into the weekly. In every single new week, you have to go into the weekly time frame. Every single new month, you have to go into the monthly time frame. So let's say in this week, you have to look on the recent breakout structure. You have to look on the recent breakout structure. The break you have to see the line chart break. You have to see the line chart break. That's something very, very important. So in the weekly, the recent breakout structure is bullish. On the line chart, the recent breakout structure is bullish. So what does this mean? If the recent breakout structure is bullish, it means the weekly will be bullish also. Okay, we will be looking for buys on the weekly time frame. So after seeing this will be much more important. If the weekly isn't clear, then we will go into the daily. But now the weekly is clear because we have the clear bullish break. So after having this break, now what follows means that you have to go into the one time frame lower, So if the market is bullish, put this into your mindset, expect support to hold. And I told you the strong support has the strong low. Let's say when you have the weekly swing low, now this will be the new session. When you have the weekly swing low and the weekly swing high like this, then you will have the trading range into the lower time frame. You have the trading range, and the weekly, because we are bullish, means you will have always the stronger in the one time frame lower. Always we have the stronger into the one time frame lower. So when you come into this one, into daily like this, then now you see Then now you see what? Now you see we have this strong low that took out liquidity and then it broke structure like this. Okay, this is the strong low. Means now we are bullish. Means now we are bullish. So wherever we are looking for sales, you have to put into your mind it's only the counter trend. It's only the counter trend because the higher time frames are bullish. Higher time frames are bullish. So why do we focus? Okay, why can we focus a lot on sales? Because the sales will be the counter trend thing. The sales will be the counter trend things. So then what happened this? For example, in here, you are daily rejected daily in here. You are daily rejected daily in here. After having this daily rejected daily in here, I mean, this was I think it was the weekly thing. It was the weekly thing. Let's say that's a weekly reject weekly in here. You had the bullish week, so you have the weekly reject weekly and then close above it. That's the first indication. When you come into the daily time frame, what do you have? That's the rule number 2. What do you have? Oh, my network is lacking. Okay. Now you have the clear breakout. When you do something like this, now you may see we have the clear breakout in here. You have the clear breakout in here. So when you have the clear breakout, what? Okay. So now what follows? Now what follows? If you have the clear breakout, means now you have to look for buys because remember, weekly bullish. Daily itself has done well. Bullish. Means now what follows the range expansion. How is the range expansion? It's something that follows. So when you pay close attention, that's the moment you add smart money into the equation. I wasn't expect to add this, but anyway, let me do this. When you add smart money into the equation, now you have the strong low. How do we know the strong low has created a weak high? It has to break the swing low to the downside. It has to break the swing low to the downside because the market seems to be bullish. It has to break the swing low to the downside. After breaking this swing low, now we know we understand from where to where, from here to here, we'll be focusing on buy. This will be our trading range. Why the market is dropping all the way down is to clear the internal range liquidity like this. After clearing this, that's why we tap into these areas. Don't worry if you don't know smart money thing. Don't worry because I will teach you on the next sessions. Then we tap here and then we get the bullish break in here. Okay, after having this bullish break, so then now we understand if we get the daily rejected daily, and then for give us the breakout structure is the moment to get the entry because we cannot get it, we cannot buy directly, even though we had the head and shoulder here, we cannot enter here directly, okay, with our stop loss below this level. No, we don't know if this level will hold or not. But remember, we had even daily rejected daily in here. We had daily rejected daily in here. And then after having this daily rejected daily, I think on the daily itself, you got the break. You got the break into the daily itself in here. Okay, you get the daily break itself in here. So when you come into the 4-hour time frame, there is no any doubts if you have the daily breakout in here. There is no any doubts that you will enter into buys. Okay, you will enter into buys. And I do remember the intros coming from these areas here. I think on this support in here, that was your entry. Don't worry, you may see that the market didn't tap here, but this the broker thing. Okay, into my account, this thing was tapping into this level in here. Then I enter into buys after knowing the higher time frames, after understanding the higher time frame. So you may ask the question, why I didn't buy even this? Okay, I had this level in here which is fresh. I had this zone, which is fresh. I had even this zone, which is fresh. So don't worry. Next session, I will show you how things are. Next session, I will show you how things are. Okay. I will show how things are. So don't worry about it. Don't worry about it. But what you really need to understand, after getting the break, remember, even this was the break from the day itself. Even into the 4-hour, I think you may see we had this break from daily rejected daily, and then the 4-hour give us the break in here. We had this break and then they give us the break in here, but the intro is coming from these areas. I didn't even get into this buy. I don't know why, but where did this buy come from? This buy was coming from this support in here. Okay, this was the support when the market tap into this and then buy. Okay, and then you buy. That's the thing. So then now let me find another example in here. Let's say this week. Let's say this week. This week we had the good storyline because we had the weekly reject weekly on the fresh zone in here. We know the weekly is bullish because the recent breakout structure is weekly. So let's go into this example in here, and then finish up. You have the weekly reject weekly in here. That's the first thing. After having this weekly reject weekly, can you see into the daily itself? You have the daily break. When I do something like this, then you may see you had the daily break. Not this. This is not a break. Okay, it has to break the SNR level. This is not the SNR level. Okay, because this is the curve. Yeah, some people they call it the curve. This is not the SNR level. The level that was broken is here. Okay, now we know the weekly is bearish for a while. The weekly is bearish for a while because we rejected from the weekly, reject the weekly, and then the daily give us the break, the SNR break. So if we get the SNR break, now we know the daily is bearish because even though we had that, even the daily itself, we had the daily rejected daily in here. So if you have the daily rejected daily in here, when you come into the 4-hour time frame, now it's much more clear. When I do this, then you have the break. You have the 4-hour break. So if you have the 4-hour break, then what comes in? I told you the strong resistance. The strong resistance will have the strong high. So where did this strong high formed? Okay, I told you have to go into the 1-hour time frame. Today I won't dive so much deeper, but the next video I will dive it deeper. So today, just understand this. When you go into the 1 hour, what do we have in here in the 1-hour time frame? You had the strong high. A high that took out liquidity in here, and then it broke structure in here. You had smart money because why do I mark strong high? Because everything seems bearish, means the strong high are the ones that will hold the price. Okay, remember my words, mark my words. Okay, then you know that the market took out all this internal range liquidity in here. After taking the internal range liquidity, remember, we don't choose the point of interest, okay? Remember, the POIs will never be chosen from these time frames. No, we don't care about imbalances. We don't care about all those stuff. We don't care about order blocks or everything. We do care about higher time frames, key levels, okay? Key levels from the higher time frame. So then when you go into the higher time frame, what key level do we have above this liquidity, okay? Because always you have to understand the higher time, we have to understand the most important key level will have the liquidity below it. We'll have the liquidity below it, and the most bullish point of interest we have the liquidity just above it. Then this point will be much more valid. The same applied into the bearish. Okay, the bearish point of interest we have the liquidity below it. So where is our point of interest? Okay, after realizing this liquidity, when you go into the 4-hour time frame, the liquidity was right here. And then what will be the next POI that you see? The Malaysian thing, okay, the Malaysian key level. We have this open and close level in here. We have the open and close level, but when you do this, we have the the support broken RB, SBR support broken and turn into resistance. Okay, when you add some more conferences into the 1 hour itself, if you have the much more conferences. Let's check. My network is lagging or something. Right. Okay. So when you check into the 1 hour, so something like this, no one will understand where you get your POI. No one will understand. No one will understand. Okay, the market tapped here, and then immediately, the market created a strong high like this, a high that took out liquidity. That's the notion of ICT. If the market is bearish, remember the resistance will hold and the expected support to be broken. Okay, you see like this, then you will see like we created a strong high that took out liquidity and then it broke to the downside like this. Okay, so what happened when the 1 hour created a strong high means the range will be created in 15 minutes. So I will tell you the next session I will tell you how the range formed, but you have to understand the market reacted where on this resistance right here, on this resistance, just on this resistance right here, and then now it is selling. What am I expecting now? What am I expecting? At least the market to reach here in the external range liquidity. the external range liquidity. That's how we add smart money into the equation. That's how we add smart money into the equation. So smart money make everything to be much more clear. It brings much more clarity when you use the smart money to, when you combine smart money with a Malaysian thing, because Malaysian shows you the direction. Smart money concept to give you the much more clarity in terms of finding the entries, because no one will understand why you choose this. No one will understand why you choose this, because when you go into the 15-minute, okay, let me show you. Okay, let me show you. Maybe you won't understand. When you come into the 15-minute, okay, you had this strong high. The market took out, broke to the upside like this. Okay, this was the internal range liquidity right here, which was the Asian high. Internal range liquidity. Above this internal range liquidity, what do you have? You have to go into the higher time frames. We won't choose the POI from the time frame that builds the range. No, we won't do that kind of business. We have to go into the higher time frames and check for the point of interest. When you go into the 1 hour, what do you have? Into the 1 hour, I think you have above this liquidity, what do you have which is fresh? You had this, you had this opening close level. Okay, you have even this left shoulder in here. When I do this, you have the left shoulder. You have this the resistance. So which one will you choose? Just go into the far, then reduce the confusion. Into the far, we have the resistance in here. Have the resistance in there. So you have this resistance. So how do you find it? Because this resistance was already used. So when you find the fresh of the freshest, you have this. You have this. That's where you enter and then sell. Now I'm expecting to sell until this lows. That's what I'm currently expecting, and hopefully the market will reach there. Okay. That's why I told you have to add some smart money concept into your trading plan, to your trading thing. Okay, you won't use the pure Malaysian thing, because the pure Malaysian people, the pure Malaysians now we tend to have a lot of confusion. Let's say, let me show you some kind of confusion. Okay, we know the market is bullish. Okay, we understand the market is bullish. Look at this example in here. We know the market was bullish because at these areas, the current market break of structure from the week was this one, was the bullish one. Okay, was the bullish one. Let me show you into this. We had the bullish break in here. When I do something like this, then you will understand that was the bullish break. It means the market is bullish, because the line chart break will be much more important. Now we know the market is looking for bullish for the higher prices. So then where did this come from? Then we had the weekly reject weekly. Okay, we had the weekly reject weekly. When you come into the daily, of course, into the daily, you have the strong low. Where is that strong low? The low that took out liquidity in here. I think that's the low that took out liquidity, and then it broke to the upside like this. Okay, it broke to the upside like this. Now we know the market is looking for bullish prices. Okay, it's looking for the bullish prices. So what happened? Market tapped into this weekly point of interest, and then immediately, weekly zone. Okay, with this weekly key level, and then immediately they give you the breakout structure itself. After getting this breakout structure, so what are you expecting? Now we understand that the market is looking for the higher prices. Okay, the market is looking for the higher prices. So after getting this bullish break, a lot of people then the problem was they see this, they rejected it and they were looking for the sales. Regardless, without knowing the market is bullish, they get this daily reject day in here, and I do remember the forward give you the nice breakout. You see, get the breakout from the forward time frame. This, and then what happened? The market remove you from this level. You see, they moved you like this. But when you understand the storyline, then everything will be okay. Because when you come into the day itself, just add the strong low and SMC into that, then you will really understand. Because why? See this. You had this, okay? Remember, weekly is bullish. Weekly is bullish, even daily turned bullish, because we had the bullish break in here. So if daily turned bullish, now we know if we have the retracement, is all about getting the entries, okay? Or about getting the entries. So then you had even this day rejected daily, it's okay. But when you come into the 4-hour time frame, I think it was in the 1-hour time frame. Okay, don't worry. Don't worry. I want to show you where did this come from. So don't worry about it, because I will show you how to combine these time frames and time frame coordination on that stuff, because we will learn about smart money into the data videos. Then you had this break in here. After having this break, now you see we created a strong low in here. The low that took out liquidity and then it broke structure to the upside. That was fine. Okay. Then what happened? The market just created the range, okay, because it broke to the downside like this. So it created a range from where to where? From these lows, okay. Remember, the market is bullish because the weekly is bullish. Even lower time frames are turning bullish. See how all time frames are, or see how all time frames are doing what? Are agreeing with each other when they tend to turn bullish. Okay, you have the range from this high to this low. That shows your trading range, and then now you had this like Asian low. I think this was the high of the range, and then this is the low of the range. Then you had the Asian low. This Asian low was as the liquidity, because I told you the liquidity is much more important. Okay, you had this liquidity, okay, the Asian low liquidity. So where is your point of interest then? Where's the point of interest then when you come into the 4-hour time frame? Your point of interest is where? Below this liquidity, because always the point of interest will be coming from the what? From the point which is lower than the liquidity. Liquidity is here. What do you have below that liquidity? You have this open close level in here. Simple. Simple. Okay. So now we are looking for bullish. Okay. We are looking to buy this thing. But other people, because they don't know the higher time frame direction, they tend to sell here. But look, they were wrong. Okay. So then to understand direction and other stuff would be very important. So for today, my video was trying to show you how we will remove the confusion from the storyline. So don't worry about it. Okay. Don't worry when you get wrong because you don't know how to add smart money into the equation. But as we will go into the other videos, I will teach smart money first. Then we add them both. Then you will really understand why the market reacts like that. Okay. Why the market reacts like that. So for today, that will be very, very important stuff. That will be very, very important stuff. So I will see you when the subscribers will reach 500K. Then I mean, not 500K, 500 subscribers. I'm sorry. Then we go into the next video. I will teach smart money and we'll combine them later on. So for today, that's more than important. Thank you for watching. Okay, thank you for watching.